Hello everyone, I hope you're all doing wonderful. My name is Marcello Colax. It is the 9th of June 2025 and I'm walking you through the European energy markets this morning. So one thing I definitely want to talk about is how to utilize the Clever Markets sentiment poll results, especially in cooperation with our new proprietary tools that we created around that. After an otherwise really strong week last week, we ended on Friday with a little bit of weakness, a little bit of hesitation across European gas and power markets. So today we're using technical analysis to identify where the price can go next. But before we go there, here of course, as always, our little disclaimer, everything you see here is just my personal opinions, and of course it is not direct trading advice. So we see that last week ended with bullishness on the intraday chart, whereas the daily charts remained reasonably neutral across gas and power markets. EUAs haven't moved for quite some time. We are still in this really tight range, as is Brent. Henry Hub did show some signs of bullishness as well on the intraday chart, whereas the daily chart remains rather neutral. So let's have a look at this. Every single week I ask my network where they think the market will go next, and we saw that from last week it was a reasonable split, more evenly split, and this week around we see that the bulls are dominating once more. So this is mostly due to last week's bullishness that we saw on most markets. Here you can see we did move a little bit higher on the TTF and on the NBP and on the TTF front month, and here the TTF and NBP front seasons as well. Same thing happening with German power. We also pushed higher. So this is why probably the market ended last week on a bullish stance overall. Now here's the thing. We have applied some proprietary tools onto this weekly sentiment tool. We have 2 years of data available for these weekly polls, and we realized that if the market is in mean reverting mode, so that means if we are moving in a reasonable tight range, you can see the market hasn't really moved all that much recently, then the sentiment tool is more of a contrarian indicator. So the market is usually simply reflecting what happened last week, because that is the most recent reference point for traders. So last week's price action is expected to continue next week, but because we are in this tight range, it is more likely to reverse. So if we do get an extreme bullish reading, then the market is more likely to revert. So what does this mean for the individual charts? Well, let's have a look here with the TTF front month first. On the weekly chart, we are observing that we are still within a reasonably tight range. So after some initial upside, we haven't seen much for around 3 weeks. So on the weekly chart, I'm working with 33.83, 37.81. I want to see this range resolve. And you can see here on the weekly chart, we are also expecting the market to move sideways for a little bit before eventually continuing lower. And we think that downside continuation seems most likely, simply because the momentum isn't there anymore for the bulls. Or also the trend tools, the two moving averages 8 and 12 on the weekly chart, are still fairly bearish. The only thing that's looking a little bit more bullish is honestly this bullish stochastic signal, where we did get a bullish signal a couple of sessions ago, but this was mostly due to the initial move higher. I'm not entirely sure how much higher we can go right now, but even if we push a little bit higher, it's possibly just more of a corrective move in an underlying downtrend. So here I have the 100% of the Fib retracement up here, and I have the 0 down here, and corrections might go, if the bearish stance is not coming true, then we might move to the 38.2% Fib retracement near 42. Okay, but this is not tradable. Let's have a look at the daily chart where the trades are actually happening. So I'm just zooming out for quite a bit, so you can see see a downtrend from February until April. Since April we have recovered a little bit and we are just now coming out of this downside correction to the underlying uptrend. However, right now I do expect a little bit more sideways development for several reasons. First things first, you can see that the momentum has flattened out. So I am looking at the MACD right here and you can see we are just hovering around the zero line, which is showing me that momentum really isn't there. Then I'm looking at the DMI and we see that the ADX line, so the white line of the DMI, is near 14. That means the market is currently not trending. Okay, yes, we did push higher on the stochastic a little bit, but right now this tool is also just hanging somewhere in the middle without any clear bearish or bullish signals that we would usually get with the market moving past the overbought or oversold signals. So here we got a bearish signal, for example. Here we got a bullish signal. Right here we are in the middle of nowhere. Now one more tool I'm looking at is the 8 and 12 exponential moving average. And you can see with the swing lower, swing higher, the moving averages have flatlined. So also here the market is not really going anywhere. So that's why I believe for the start of this week probably more sideways. What's interesting also is the spinning top. So these spinning tops are usually showing that the supply and demand balance is fairly even and nobody is willing to push the market either way into a firm direction. Now if you want to be really precise, you can mark out the spinning top itself. So we would, for example, mark out the peak here and we would mark out the trough of the spinning top here, and we would say, okay, we might be getting downside continuation if we push below 35.87, and we would get more bullish continuation if we move above 36.85. So absolutely you can do that. Then I would superimpose these levels onto the hourly chart. But to be completely clear, the flow of higher highs and higher lows only continues above 38, and the flow of higher highs and higher lows is only undone below 33.7. So there's still a little bit to go. So what do we do within this tight range, or once this range is resolved, the spinning top range? Well, for that we of course look at the hourly chart. Here we are a little bit more clear about an intraday uptrend that has now a little bit flattened out. The bulls don't have their head in the game anymore, so we do see some weakness, and that is also reflected with the momentum topping out and also with the DMI or the ADX portion of the DMI being below 20, near 16. That's also fairly neutral in itself. We see that the moving averages have flatlined as well. So we expect the market to push a little bit more sideways before eventually continuing higher. So overall, the idea is still for the market to push higher eventually, simply because we had this good run up on the daily chart. So here once again, this neutrality is playing out on the hourly chart, on the daily chart, and on the weekly chart, but we are still bullish inclined, possibly towards the 200-day exponential moving average. We also have a 100% extension here near the 40.45, and the 100% extension on the daily chart is simply this up leg after the correction. So this length is then reapplied here, so we have this as a target. It's like this length is extended one time. This is not a surefire way, and there's no guarantees, of course, so I would always keep an eye on the hourly chart. And I want to know if this sideways range, how wide it actually will be. Is it going to be the 33.738, or is it going to be a little bit tighter? So we don't know that yet. So it is the hourly chart that will give us the earliest possible indication. I hope you found that useful. My name is Marcello Kolax. If you do have any questions, let me know. You can find me on LinkedIn, or you can send me an email, hello@clevermarkets.com. Be aware that the Clever Markets Technical Analysis Academy is launching on the 23rd of June. So simply go to clevermarkets.com, go to Services, Technical Analysis Academy, and here you will find all the details for the Academy that will elevate your TA game. We have 5-star reviews from every single year. You are getting 90-minute lectures 3 times a week for a full month. You do get weekly live tutorials to turn your real trades into case studies, and you will have like one-on-one access to me as well to turn everything you've learned into your own methodology. Because I've been through all the courses that are out there and I know everything that exists under the sun, and what is usually missing is the practical implementation. So I'm not the guy who's simply throwing tools and charts at you. At the Clever Markets Academy, I will actually help you to combine everything into a coherent system. I'll help you build out your own methodology so you are prepared for the years ahead. If you do have any questions, reach out. See you around, and bye bye.